So today we're gonna go through liquidity. We are gonna have two calls for liquidity. I don't want to overload you guys. So today and tomorrow at the same time. Yep. And every call is gonna be like 1 hour, so nothing crazy. So as I told you before, liquidity and supply and demand together is what's driving the final price. And we can divide liquidity into multiple parts, or we can divide them by many ways, right? Based on many factors. So first of all, liquidity is every single high and low. That's what should be very clear. This high, this high, this high, this high, this low, this low, this low, this low, this low, all this liquidity. And our job, even the highs that hold, for example, let's say this guy held, even though this guy held, this is still liquidity in future. So our job is to identify what liquidity is gonna be taken out now and what's gonna be taken out later. And this is the same as the supply and demand and efficiency and order flow, right? The highs and lows are just gonna be protected until we reach some high time objective. The moment we tap, for example, here, in this case, I'm real bearish. I think we're gonna take out this low. Oh, okay. Let's say these lows are being protected. You have a trend line liquidity, but just because it's trend line liquidity doesn't mean that you can just take a sell and target it, right? So it's basically order flow. You have buy side orders being stacked up in extreme, and it's protected until we reach some higher time frame objectives. So let's say this, or something on weekly here, which was a weekly gap in this case. But yeah, so we can divide liquidity into subjective and objective liquidity. Subjective is everything you've been taught till now, right? You have trend line liquidity, you have equal high, equal lows, but I already told you guys why I don't consider those liquidity. It's just efficient pricing. For example, trend line like this, I don't really consider liquidity. Because if you market like this, it's very subjective, right? Someone's gonna market like this, other guy's gonna market like this, and this is his POI, and other guy's gonna say, oh, this is equal low, and this is their POI, and it's all messed up. So we want to refine our liquidity levels into singular level, right? Let's say if we check this low, you wanna know what pushed this guy up. You go to daily, don't see much. Right, you go to weekly, your structure. So instead of marking this whole trend line, you just mark it as a single low, the lowest one. Because from time to time, you see price, you have a trend line like this, and price just takes out one of those and goes. And it will eventually become very confusing. So we'll have clear rules on what levels we trade or what we don't trade. Another thing is, today I saw some guy trading some channel setup which looked like this. Okay, let's see. We have a strong high. Then we have a channel up like this. It's not really marking liquidity, but it's just to show how subjective it is, right? And the setup was essentially this, and you take sell here on the channel. And it was like algo trading. It was not retail trading. It was algo trading, and they trade this. But then if you look at this, you can see why it is so wrong on so many levels, right? Price can just, someone on the same group can mark the liquidity like this or the channel like this, and the whole setup is fucked up, right? Because you would wait for something higher to retest it. The same with lit trading. They trade, let's say, trend lines, right? Fake outs. So let's say you have something like this, and they wait for this to take a buy, let's say, to induce buy, and then sell towards here. But the important part is the buy. And one can draw a liquidity like this, like the trend line like this, and the other guy can, I don't know, make it a bit, okay, let's say, let's say this mitigation looks like this. Yeah. So one can say, oh, so we induce them and now we buy, but the other guy can throw it like this. And now nobody knows who's right. We can only know when price is finished. So we want to avoid situations like this. And we are gonna have three liquidity levels, clear liquidity levels to trade. So subjective, equal high, equal low, trendline liquidity. You can use those for targets if you want to, but I wouldn't recommend you to use these as trading level. Then you can divide liquidity into active and passive liquidity. Active liquidity is what is being created right now, and passive liquidity is everything that's on the left, right? So far you have been taught in SMC, whatever, that you have an OB, let's say, and just this is your inducement or liquidity, but that's not the case. This is liquidity, but also how price is moving towards that can create liquidity. This will especially apply to levels, to rebalance levels. Because if you trade FEG, you see, for example, here, we are trading this rebalance. Okay, let's choose a random guy. Ahmed, are you here? Ahmed Abuel Hagak.
Yes, I'm here.
Oh shit. Your friends. Okay, then someone else. Brian Cataneo. Can you mark liquidity in this range for us? What sell side liquidity do we have here that we can buy from? Or someone, anyone? Okay.
None.
Yeah, okay. So we do have this, you can consider those liquidity as well. But what it essentially would mean in live trading is this is just extreme buy order flow till we meet an objective, which was something here, high resistance liquidity, right? So this is just efficient price action. Then why I don't consider it liquidity is just old orders that are closed and the price just goes through it. And this would also mean this low resistance liquidity, you don't expect much from it, right? This is something I'm not gonna go into detail, but simply, if you have something like this, price taps into something, this is called low resistance liquidity, right? And what this means for you is you're not gonna expect a lot of pullbacks here, or any crazy pullbacks, any crazy traps. You can just trade delivery into it, okay? Very easy trades without any manipulations. Everything changes when this is high resistance liquidity. So it mean like we create strong low or we have some stop hands like this. The moment price takes this, so let's say you are trading EPA here, everything looks Gucci. Price take this and you say, oh, so this doesn't really mean anything. I'm gonna continue trading here. This is something that's most likely gonna happen. Take one, take two, and sell, or take all and sell. So this high resistance, keep it in mind. Write notes if needed. But in this case, there's not much that can cause a big buy. So what does it mean for us? If there's no liquidity, then we have to create liquidity. We have to induce people in lifetime, in real time, to participate in the market, right? And how do we participate in the market? And how can we give our money to the market? We execute our trade on MT4, we hit our stop loss, we hit our break even, we hit our trailing stops, pending orders, whatever. All this is liquidity. Opposite of this would be take profit, which would basically mean taking money away from market, right? So whenever some entity, bigger entity is closing their trade, the profitable trade that was not a sacrifice, right? We know that, for example, here to buy up, we have to sacrifice the sell to buy. If we close this buy in profit and we close it here, what does it mean for us? We are selling and we need buy side liquidity as well. So when we close out in profit, we need liquidity too, not just to open orders. Keep that in mind. That's why sometimes you see price is taking a lot of liquidity, gives you a reaction, and still, so for example, here, this is fine too. So let's say price is taking out a lot of liquidity, but even though it's a lot of liquidity, price still induces people, right? So this would usually mean that it's gonna be a big reversal, because if we are stacking up orders now, it would just mean that we are about to sell big sometimes. That's why I'm targeting this. Okay, but that's everything I wanted to talk about when I said active liquidity. We are gonna go into detail. So execution, I think it's pretty clear. It's like every high and low. Stop loss is every single high and low. Break even above every high and low, above every low, below every high. Trailing stops the same. Pending order is basically SMC and I don't know, major levels. So for example, when price breaks this high, right? This is, you can say this high resistance. We had some stop hunt here. We have strong high here. When price takes this, you can expect a pullback, even like this. Oh, now I forgot what I wanted to say. Oh shit, what was it? It doesn't matter. We'll get to that later. So we'll go to our first objective liquidity level today, and that's gonna be inducement liquidity. Inducement liquidity definition is just last structure that broke opposite structure. And also explain the idea behind inducement. What does it really mean for us? And this will open some eyes, because this will be a new way of thinking for some people. So first of all, we usually have a breaker structure. So let's say this, our last breaker structure, the most recent breaker structure. We always consider the breaker structure FBOSS, okay? And now it depends on many factors. Maybe price is inefficient below. So let's say we have IPA below. Maybe we are EPA, but price doesn't really mitigate it deep. Like it's just slightly rebalanced like this. Or whatever reason. Those two are the most common. Or even we have FEG here. So we would usually prefer to see this as FBOSS and see this as our ILQ, inducement level. The only moment you don't see it like this is when you are trading towards low resistance liquidity, when there's nothing that can stop the price. So you just follow the EPA religiously, or when you're just trading towards, I don't know, you're inside APG and you're selling this, and there's no rebalance level above that can stop the sells. Otherwise, FEG, IPA, bad rebalance will lead to inducement and then key breaker structure. And this will be our main entry model. So key boss, continuation, I'm assuming. Usually if you want to enter here, you want an opposite color candle on the same time frame. So if this is M15 structure, you prefer M15 bullish candle. If this is H1, you prefer H1 bullish candle, and then you enter. I already showed you guys how I refine my trades. If the bullish candle is like this and the stop loss is too big, then of course you can just refine the buy like this lower, right? There will be some moments when price will do this instead. Like you take your first entry, everything looks Gucci, and then suddenly you get taken out and price goes to your direction. The only thing that can cause this, and I can explain, is that we don't have enough liquidity. And the only moment we don't have enough liquidity is when we are trading off rebalance, solely rebalance. So we have FEG, price taps in, and there's still a FVG left, right? So you always want to see some sort of stop hunt. And this can happen. I mean, in this case, it would be pretty unexpected, but yeah. And the other scenario would be when we have inducement ready, price goes, but there is still FVG left here. So this can happen. My recommendation is just to have bigger stop loss when you have FVG above, but that's your choice. When would be MSU invalidated? Is this? So you have some structure, MSU, but instead of just taking ILQ, price takes out external liquidity as well. There's always on the one ILQ, okay? And everything before, every single low before is our external liquidity. That doesn't mean that price cannot buy, but that would mean that we cannot enter on just a bullish candle, right? Because what's a threat here is that we might be changing direction as well. And this will solely depend on context. But most of the time what happens is this lit cycle, you have a build-up, price induces them, price continues, creates a trap, induces the trap, can reverse, whatever. So for this scenario, we'll have a different entry model, but don't enter on one opposite candle. It's not enough. So this is MSU invalidation. Now, next to our stop, which would be reversal MSU, which will be our second reversal model. So for now, you know EPA, and this will be second one. So in real time, when you see this, or even this, you cannot really tell if it's continuation or a reversal. The continuation is finished, and what it would mean for us is this becomes your MSU POI, and you want to trade this strong low, unless there's something crazy or like inefficiency below, or we tap into something on high time frame. But if nothing like that happens, we can even put a limit here, right? Or you can do this and trade lower time frame MSU or EPA, or just trade a simple rejection, OB rejection. But in this case, you don't really know what's happening, because what can happen is, okay, this was our FBOS, right? Nothing changes about that. This was our inducement. But this inducement can also be our FBOS, as FBOS down. So it would look something like this. Then you would have inducement up. So when people see this, people are trying to sell, right? But the only reason why this happens is, let's say there's OB and there's not enough liquidity. Then you have a key boss, supposedly a key boss. But this key boss can also be our inducement. And that would mean if it is an inducement, then this will happen afterwards, which is a key boss. And you want to trade either here on reversal on opposite color here or here, or even you can wait for EPA, right? So you have 4 ways to enter, and this will fully depend on context again. Maybe there's some high time frame liquidity, high time frame FEG fill, high time frame OB without liquidity, or even it can look like this. This we had in the previous call. This can be like higher time frame EPA, price comes back, you hope to lower time frame. There's some random OB. You don't know which OB is enough, which OB is legit, but this will confirm the OB for you. So you can use it as confirmation and also as, as entry and also as confirmation for your OB. This will signalize that there is something on the left that might be valid, that can give a pullback on high time frame or even reversal on high time frame. So let's go through some examples. By the way, does anyone know why we sold here today? I already showed you at the beginning.
Was it a FEG maybe on the 4 hours?
Okay, FEG on 4 hour can be one confluence.
You have
But
also
more,
this liquidity on this side. Maybe I can like
you
got
can
this
allocate.
liquidity.
Oh yeah. If you see liquidity like this, then it will become very subjective because the same thing happened here, right? The same thing happened here. Asian high taken out into Frankfurt. Previous day high taken out, Asian high taken out. And this would be a valid sell too. There's some previous liquidity taken out. So marking this as liquidity is correct, but don't rely on it as much.
We rebalanced the previous daily range for that trade.
And the rebalance was the main reason to sell.
And then we have EPA in 1 hour.
1 hour.
Yeah, just here.
Oh, okay. I don't recommend using it like this.
Okay.
This is the same as when you use it for reversal. Yep. We are in the uptrend, downtrend, and we are just using this. It's better to use it to look at it as FEG fill. It will be way easier. Okay, so I'm glad everyone sees it. And now let's go to the ILQ. So for example here, this fine too. Let's backtest this week. The top of this. So now we all know why we sold here, right? This was FEG fill on weekly. Then you go to lower time frame and you want to see something happen. So either you can trade for now, you only know 2 reversal patterns, but now you can see breakout structure, 2 breakout structures and continuation. So you look for a continuation here on lower time frame, or you wait for another break. And also when you see this high and this rejection, you would always like to mark this guy out and look at the left. And this was H1OB. I think I showed you in the last call. H1OB rejection. So you can continue trading this. We are efficient. We have FEG above, which can be one confluence to think why this high should not hold. And this is also the most recent breakout structure, right? FBOS. So this FBOS. Rest are inducement, and you have a bearish candle on H1. Remember, your valid trading range from EPA is from this low to this high. This can still be taken out. So your valid trade would be, your original trade would look something like this. You see this liquidity, you know, oh shit, this low resistance liquidity. So you can just blast through it like this, right? But if you want to be sure, then it's always good to partial at Kibos. And then you can refine your trades however you want. You can put it on FVG like this. You can go to M15 and find some FVG here. You can go to M5 if you want to. And you see even more FVG. Then you see this rebalance. That's not really great. You can put it above. This will likely be liquidity. And just refine the trade like however you want. Doesn't really matter. The refinements are like up to you. Because we are in the low resistance range, it also means that we can afford to trade this on lower time frame. Because there's, as I said, there's no force that could push price higher. Sometimes it can happen from time to time, but most of the time this will be respected and you'll just create clean order flow, right? So you can hop to M15 if you want to. Follow the structure on M15. So you'd have a break of structure, a high, a low. So this will be MSU. But of course, we are at the beginning of the order flow. So you would always prefer something on something that mitigates deeper than just this slight rebalance. Because even if this guy played out well and we did sell from here, this will most likely be taken out anyway in future, like this. So we want to avoid trades like this. This is SLQ. We're gonna get through that. Go through that later. Nothing. Breakout structure. 50%. Price breaks. Okay, so now here you see price gaining momentum. See here like this. Now we are going down, 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 down. Here in these cases, if it is low resistance liquidity, you can you can decrease time frames if you want to, and then you'll get to the point where price is just flying straight down, and all you can do is trade M5, M3, M1. I don't do that, but you can if you want to. So here, gaining momentum, price breaks, FBOS, inducement, bearish candle, again, another sell, check if there's FEG or not. Check if there's FEG or not, and then just have a stop loss like this. Okay, so again, check if there's FEG, there's no FEG, stop loss like this. And this again becomes your MSUPY, this whole range. And you can put a limit, you can execute a sell whenever you want, or you can just wait for M1, bearish, reversal pattern, EPA, IPA, or MSU reversal, and you can trade that. So FXCM was closed on this day. This was New Year, but on other brokers, there was a wick like this that mitigated like 50%. And you can still continue here till the end. So you have a break, bearish, and you can sell, right? This becomes MSUPY just in case. And you see price is just gaining momentum. So here you can try M5 if you want to. So you just have EPA. But it's really messy. I don't recommend this to anyone. So let's go through some more examples. We had the same thing here. We had liquidity on H4 taken out. A daily high resistance liquidity. So if you go to daily, you see we were in downtrend. We tap into something that pushed price into uptrend. And now we want to see every single strong high as a reactional level, right? Every MSUPY, we don't want to use it anymore. So price takes this guy out. That's one possible sell. But except for that, we had daily order flow, which with this OB being rejected, mitigated. And the next level for that is around here, 50%. And of course, wicks are inefficiencies as well. So you can use this as a POI if you want to, then you can refine it to H4. On H4, it didn't really tap into the OB. It just filled the FEG. The OB was on top. So what this means for us, oh, was it? Yeah. So what this means for us is we cannot take a direct trade after this rejection. If it did reject from that high, then we can take a sell, just like this. But they didn't. So the only choice for you here is to have a trade an entry model from liquidity, which I'll show you in the next call, or trade this on lower time frame. So you go to M15 and you see, oh, so we took out liquidity. This also was pre-Asian high. We had FBOS, inducement, bearish candle. So you can sell here. In cases like this, if you want to take a direct sell, right? You can take a sell like here or on a mitigation. I always prefer the second one, but if you want to take a sell here, I would just recommend you to add 3 or 4 pips stop loss, just to be sure, because it's worth it, honestly. Usually if you catch reversal MSUs on M15, you're gonna catch like 100 pips at least. So what is 3 and 4 pips? And in future, when you trade bigger accounts, you're gonna care about pips more than about RR. Keep that in mind. So you can take this sell, let's say here on bearish candle, or you can wait. So this would be the trade, like 6 pip. Why not make it like this, just to be safe? Sometimes price can do this, still take the high, even though we form a bearish candle. But again, this is based on FEG on the left. So we have a key break or structure, and you can take a direct sell if there's some confirmation from the MSU POI, or you can just trade EPA, IPA. So we have break. If EPA 50%, you would expect a trade here. You would get stopped out for sure. Then you have FBOS, inducement, liquidity, and bearish candle on the same time frame. So if you want to, and you're not in drawdown or anything like that, you can re-enter. Right? That's another example. But there's a ton of examples here. Like you can backtest the whole chart and find a lot of trades. Like I think 50% of my trades are just MSU. It's as simple as that. For example, here, I'm gonna break down this price action quickly. So what happened here? We had daily FVG. We don't have any entry model for FVG, by the way. So you always have to trade a reversal MSU or continuation. So we fill daily FVG, we go to H4, price reversing, you see breakout structure, even this EPA, you don't really want to trade this, because why? Even if price was bullish here, price will most likely create liquidity and then buy, right? So any buy force. Now you can ask me, okay, but why is this not a stop hunt? And why don't we buy here? Can anyone tell me why not? Like see price action like this and buy.
What was the question?
There's been no reversal MSU.
Okay, there's no reversal MSU, of course. But from a technical standpoint, if you see liquidity like this, as I said at the beginning, you might as well just, and price breaks down again, you might as well just keep taking buys until you lose, right? Because this way of looking at liquidity is very subjective. So we always want to see some visible breakout structure, even though this is not a reversal MSU, and this is like some form of other liquidity engineering, nothing official. You know, just seeing structure being broken up before anything taken out would mean that it's liquidity for us. So this liquidity, this sell side liquidity, price takes it out. We can hope on lower time frame and trade lower time frame delivery. And here you would see you can even add more confluences to this trade. So you have previous day low. This would also be previous day low, but major stop hunt, previous day low stop hunt, breakout structure up. Now, just this is enough for you to take a trade, to take a buy. But if you want to play it even safer, you can wait for EPA, 50% not mitigated, so you don't really know. You would wait for here to give you some reaction and some confirmation. So let's check. I'm not sure if I can play M5. Yeah, I can. So here on M5, you don't really have any reversal confirmations yet, right? You just have a break of structure. So you want another one, or you want a reversal MSU. Okay, I think it didn't break. I'm sure it didn't break. No, whatever. And then this was the 50%. Price final breaks it. Then it gives you a bullish candle, and you can refine it however you want. Lower time frame. You might miss the trade. You may not miss the trade. That's all up to you. So in this case, you'd miss it. No problem. You wait for another day. If this high breaks, it will mean this whole range is your MSU POI. And again, you can take it by wherever you want. And your job is just to refine the level down, right? So if you refine it like this, it would mean all sell side liquidity is out, right? If you refine it like this, that would mean OB. Then you can go to M5, M15, and you can refine it to FVG. And you can put a buy limit on all of those levels, or you can just wait for lower time for entry. And again, hope for a high RR trade. You can go to M15, nothing, M5. M5 would give you, so this was high time for OB. There's not much liquidity. And this was also H1 structure. So M5 would be entry time frame. Then you have FBOS, inducement, bullish candle, key boss, break, high, high, inducement, break of structure buy, MSU POI, and then we are trading off a rebalance again, so you will need some liquidity. Here you can check even lower time frame if you want to, but this entry is the last buy is questionable, right? But these two you should get for sure.
Sorry, Milan, I have a
Yeah.
question. Which is the better entry
Second one.
between FVG and SLQ here in this
Oh.
area?
Where's the SLQ? This one?
No,
This one?
no, just wait. Yeah, here. No, attends. Just wait here.
Oh, this one.
Yeah.
This not SLQ until it breaks. It's not even SLQ.
Okay.
So yeah, but you always prefer this trade. Yeah.
Okay.
I mean, this one is fine too, but if I enter here, then why not just, put a stop loss right below like this, just to be safe. Play for win rate. So we have this one done. Did I talk about entry timeframes before?
No.
No. Okay. So if you are trading H4 objective, so a reminder, objective can be liquidity, can be inefficiency, FVG, IPA, can be money transfer, which would mean OB in extreme. Okay, like rally based drop based rally. If the objective is on H4, our lowest time frame would be M15. I mean, lowest, it's lowest for me. Sometimes you can trade M5, but there's a lot of fake reversals, so that's why I don't use it. I would only use M5. Use M5 if M15 is too big. So we have a liquidity level that is visible on H4, on H1, on M15. So you naturally choose the highest one. If you go to daily, you don't see the high and the low or high anymore, so don't use it. And then you trade M15. So a quick example. This is even a daily liquidity level. Okay, it's not. So for example, here you don't see structure, right? You can go to H4, and on H4 you see this low right here. So let's say you know why this low is valid and you want to trade a buy from here. So you say, okay, I can trade this based on H4, meaning I would wait for one more H4 candle, or I can just hop to M15 or M5 and trade this. So I go to M5. So usually you can check H1 as well. H1 is not forbidden. M15, H1, okay? M5 is just a rare case. So you check this H1 and you see, oh, so if I were to trade this on H1, I would have to wait for a bigger structure here. And that would be 50 pips. So that's the end of the day. Hey, you can hop to M15. And you see a low, a high. So H1 and M15 is the same, right? And for you to trade this, you would have to either trade internal, which is awful to trade, or you can just hop to M5. So you go to M5 and you see, oh, break a structure EPA, OB mitigation, and you roll the ball. So H4, M15, M5, H1 would be M15, F5 would be lowest. So F5 lowest. And that's it. And of course you have daily. So on daily, I would recommend M15 as lowest, but H1 as primary and 3 time frame, right? So quick example, we go to daily. Fine. Okay, you have a breaker structure. There's some sort of internal liquidity on daily. Then you hop to H1 and you see, oh, you have FBOS, inducement, KEYBOS. In this case, this SPY is impossible to take unless you have some limit here and some OB refinement here. But what you can catch after MSU POI, you also know that usually when price is about to reverse, it mitigates the extreme many times. So you don't have to be scared of losing the trade. So MSU POI, you can execute the trade however you want. KEYBOS, FBOS, inducement. This is just like huge. Price takes something out here. Doesn't matter. Then you have 50%, right? But again, daily liquidity level, H1 reversal, MSU. And you would choose M15 if H1 was too big, as always. And for weekly, you would prefer daily and H1 is lowest. So if you take note or screenshot, then remember this. Okay, let's go back to our examples. So we'll go through the last one and we can move on to the next level. So for example here, we have a break of structure and our ILQ would be this high, obviously. So we said we can enter on M15 or you can enter on the same time frame, right? Which would mean this H4 ILQ, so wait for H4 bearish candle and wait for refinement and take the sell. But in this case, this was a continuation already. So that would be a first objective level. Do some charts again, send it to me. And if you have any question, just send it to Discord. And today we'll do one more thing, one more reversal pattern, and we are done. And it will be relevant boss. We're gonna do this one now because it's pretty quick. So for now, we have 3 out of 4 reversal patterns. We have break of structure, EPA. So we will trade this. You have reversal MSU. And then we have reversal relevant boss, which will be a simple break of structure like this. And then you take a sell and price continues, hopefully. Price continues. So we don't wait for EPA and we can take a direct trade. This is pretty good because sometimes price doesn't really create EPA and it just goes, like, for example, today. So what do we need for a relevant break of structure? First of all, high time frame objective always. Okay, remember FEG, inefficiency, liquidity, liquidity and money transfer. Second would be a break of structure on a relevant time frame. So for me, it would be M15 plus. Okay, but it also depends because if it's a daily liquidity level, for example, just daily liquidity level, you don't really want to trade M15 break of structure. You will want at least H1, right? And third would be timing or timing liquidity. So timing, we won't go through timing in detail really, but just know that there are some cycles that, I don't know, we have, yeah, you can study this in ICT, just a Judas swing, right? Asian high, price takes this and just sell down. Or you have Asian whipsaw, price can go up, take this guy during Frankfurt, then London manipulates down and the rest of the day continues like this. But the problem with these models is it's very subjective. Like again, you would see it in hindsight after the day ends, but in real time, it's you have 10 models and you don't know which one to choose. So just keep in mind, timing for me is only London close, 3 p.m. And that's all you need to know. 3 p.m. Central Time. Okay, London close would be, it's at 5 p.m. but I prefer tripping 4:30 till around 6 p.m. So remember this. And also remember that London close is only valid if New York continues London. Okay, so you have Asian. A quick example, you have Asian. Session accumulation. You have higher time for objective right above. You have Frankfurt open into it. Then you have London session. You have your relevant breaker structure. London is trending, you can take this sell. Then you have New York, that starts here. So if London was trending, you want New York to continue London. And if this happens, and there's 4:30 till 6, you have another high time objective. Price breaks this guy, break a structure, then you can take this buy as well. Okay, but that's the only time you'd use London close. It doesn't even have to be a break of structure. You can use any model there. If you're anticipating a reversal and it lines up, then why not take it? And timing liquidity would simply mean previous day high low, and Asian range high low. And it's as simple as this. Next time, remind me to talk about London and Frankfurt session a bit. So this is everything. You only need one of those, either a reversal during this time or Asian high, Asian low, previous day high, day low, taken out, lining up with high time objective. So that would explain the sell today that I took, because if you trade M15 plus and you wait for EPA only, then there's not a really good trade, right? So first of all, we have this as previous day high. Yeah, let's play this. Previous day high. Then this was our H4 daily rebalance. So low, high. Then we broke this high, which would confirm this low. So we have rebalance. It's the high. So we have timing liquidity and high time frame objective. Price takes both out. And of course, you wait for some break of structure. So you follow the same rules. You have a high, low, high, break of structure. And then you can take the sell anywhere you want. You can take a sell here. You can take a sell here, here. Or you can just refine it to, let's say, M3, M2, M1. Yeah, let's say M1 MVG is fine. Right? Original trade, refined trade. And this is how I executed it. Stop loss is tight. It's gonna be good. And you just trade towards another high time for objective, which now would be, this would be partial level. This can be full TP potential. Okay. So that's one example. Let's go to another one, which will be here. So here you see the choice of time frame is pretty clear, right? This is daily level, daily inefficient wick, refined to H4 OB, refined to H1 OB. All these time frames would mean that we can trade H1 or M15, but it's pretty clear which we would choose, because if you trade M15, high, low, high, everything is like super messy, right? And trading this would be, I don't know, suicide, honestly. But you can also see you have break of structure, big break of structure, or even here. It's fine. It doesn't matter if it breaks two structures, as long as you don't want to sell here. Okay. And as long as the two break of structures are not inducement. So let's say we have F was up here. Okay, let's say the structure was a bit different here, and it looked like this. And here we took two structures. So it would be inducing two lows, which would be invalidation point. You don't want to take it back. But in this case, you had F was down, inducement up into higher time frame level, one trade. In case you missed this, there was H1 reversal, H1 rejection of the OB as well. In case you missed that too, you go to H1, because M15 structure is very unclear. H1. So we have previous day high taken out, Central Europe time, high time frame objective, money transfer, and then break of structure. And you can take the sell like however you want, right? This is the default sell. Then you can refine it to, I don't know, M15, stop hunt, break, mitigation. In this case, you don't see this stop hunt, this strong high as a trap, because you are not reacting of anything. Okay. But if there was, let's say, high resistance liquidity or some higher time frame objective here, then this would be the first place you look for target. So this would be the trade, let's say, and this, got a few pips just to be sure again. And this is the trade. Before this, there are many other. This is fine too. So you have higher time frame rebalance as higher time frame objective. You have inducement liquidity on H4. So what does it mean for you? You can take this sell after H4 bearish candle. You can take this trade after EPA on lower time frame, or you can take a rel on boss, because this line up to be, this is 3 p.m. plus minus 30 minutes. So 2:30 and 3:30. So this is your reversal window. High time frame objective, no timing liquidity. This is an Asian high, previous day high, nothing like that, but just the reversal timing is enough. And then you have a boss on M15, and you can take the sell like this if you want to. It doesn't really matter. After that, again, we had something very clear. So this is Asian session. Oh shit. This is Asian session. Previous day low taken out. This is pre-session. Timing liquidity taken out. Then you had Frankfurt open. Inducement into daily rebalance. So high time frame objective taken out. Timing liquidity taken out. And all you have to do is wait for a break of structure on high time frame. So in this case, I would just prefer H1, right? High, and it's the same. Huh?
Which was the entry here?
So after this, you wait for break of structure. Then you can just mark this POI, whatever. You can also see that this POI doesn't have any liquidity. So you can trade a reversal MSU, or you can just put a limit and execute it.
Okay, thank you, bro.
So FBOSS, this was also what an FBOSS up inducement, double inducement into higher time frame objective, right? So if you take this by, then it's just FOMO. Then before mitigating this, we see break down, break up, FBOSS up, inducement down, bullish candle, buy. Like this. If you want to, you can refine it however you want, based on lower time frame. Huh? No.
Don't you wait for price to be efficient?
Your mic is not working, but we trust you. So, and of course, this after is EPA again on H1.
Can you hear me now?
Yeah.
Before you break the Asian high, don't you, when you take the imbalance downstairs,
Annotate on
it's
my
not
screen.
efficient. It's just one break on the 1 hour.
Shall we annotate on my screen?
Okay. I cannot annotate. It's the first break of structure on the Asian. Yeah.
This.
So how can you enter when it come back? It's not efficient. It's not two break of structure.
Oh, because we didn't break twice.
Okay.
Oh no, are you
didn't see that.
asking? No, I'm asking you. Why it's not efficient, or where it's not efficient?
Because you said efficient is when it breaks 2 times.
Oh yeah, so you're asking why are we buying before breaking up?
Yes.
Yeah, so
Yes.
that's the real one break of structure. We had a Asian low taken out with higher time frame and with higher time frame objective and higher time frame break of structure. So if all this lines up, then you can take a trade before efficiency. But if you don't want to trade right away, so let's say you don't want to trade this right away, even after this you had break of structure, mitigation, right?
Yes.
H1. So, oh, it's not efficient actually. So this is H1 structure. So you can risk it. The model itself has high win rate. But if you follow all the rules and all the conditions are met, you have a break of structure, you can take a trade right away. And you even had additional confirmation, or you can wait for another break of structure and just trade simple EPA. Like both are fine. But I'm showing you how to take a trade without EPA. So we had 1, 2, 3, 4 examples. I can show you one more if you want to. Let's see. I mean, this is the same as we had. Right? This would be previous day low. Stop hunt into FVG fill. This is daily FVG fill. Asian low taken out. And again, after break of structure, you can trade it right away. If you want to. Like price comes back, you put a buy here, stop loss here, and you're good to go. And this would apply to cases where people want to swing without thinking much. But that will be everything today. So do we have any questions? I'll again post this video on Telegram so you can rewatch it. And tomorrow at the same time we'll cook. But now, since everyone knows high time frame objective a bit and has a solid entry model, you can start doing markups, right? You can start playing out days, like doing 1 day, see all potential entries, following EPA, IPA, objectives, traps, and that, for example, here, objective, inefficiency, FBOSS, inducement, bearish candle on H4, reversal MSU, MSU PY, possible buy again, right? And this would also mean that this is a continuation MSU. Right, F was down. So we had bullish, F was down, inducement up. So this was the inducement. This was double inducement because of FEG. I even have some double inducement examples, so you guys know when to be careful. Let's say 2017. That is fine. So for example, here. Okay. Yeah. So here you have a break of structure. You have, so in real time, you'll see this. Break of structure. This is your ILQ. Price breaks. No entry yet. You can enter on lower time frame. On M15, H1. Bullish candle. So your trade would be like this. Right? And then you have a double inducement. And if something like this happens when you're doing markups, let's go to lower time frame and you'll see why. So we had an OB maybe that was stopped. So it must have been something on H1. But most of the time you cannot really predict those things happening. So it was just this, as simple as that. But as I said, it's impossible to predict. Sometimes it is when, for example, if the OB started here and price didn't reject it and we just rejected off, let's say, rebalance, then you can expect these stuff. But as in this scenario, you cannot. We can even try one more. August. June. Yeah, same thing here. This is even triple inducement. So you have FBOS, inducement, and it would be very hard for you to keep your bullish bias here. But the bullish bias should be clear in this case. Like we are just reacting off FEG, so price should go higher naturally. But then how to avoid this is either you partial a lot, you put break even a lot, or you just trade off extreme levels, like really good levels from the left. You know, so let's say you have some price action like this on the left. You have this extreme OB, liquidity, then price creates structure. You have ILQ, price takes out ILQ, gives a reaction, then price takes out the liquidity but doesn't tap into the OB. And if you want to avoid a potential loss, then you just wait for the extreme level. But if you do that, also you'd miss a lot of trades. So for me, I think it's the best to just take every trade with confirmation, partial, and then just break even and hold it. But yeah, you guys will see it after you test it today. So does anyone have any questions? Last 2-3 minutes. Listen. Whatever, man. Okay, so that will be enough for today. See you guys tomorrow. Good luck. Bye-bye.
Boss.